Welcome to The Real Money Show, the number 18778 Silver, and the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and what a week. I got to tell you, try to take some breaths here, buddy.
I'm trying.
You know, last week we said, hey, here's where the price of gold is. Everyone take a step back. You know, nothing's happened to the market. Boy, did that get stale quick. The market then went down on both gold and silver. I think, did gold break 3,000?
Last week?
Yeah, did it go below 3,000? Okay, so it did go below 3,000. Silver got into the high 28s, and then just like that, it's like, boom, it was right back to where we were. And, you know, we posted the show on YouTube. Give us a follow. And the market was up. So it was like we talked about where the market was. It had gone down and recovered by the time we posted the show like 4 days later. Wild stuff in the market. But it does bear repeating. Gold, as we record the show here on Thursday, 31.53 US. It's up 20% on the year. Silver, $30.86. It's up 7% on the year. And when I think about silver trading above $30 an ounce, I have to go back, way back, Jerry, to like, I don't know, 6 months ago.
Way back when?
To when, no, but in all seriousness, last year, the price really worked hard, you know, sweated to try to regain that $30 level. And I can't say how strong the $30 level is. Yes, we went below it. You know, they hammered it below in December. They got it back down below in April. We'll see what the short positions look like tomorrow, and if they were able to close out a bunch, if they've added a bunch, time will tell. But that $30 level is key. We're sitting at 100 to 1 ratio.
102.
102, and silver's trading above $30 an ounce. And for those that don't know what I'm talking about,
break that down.
There's right now you need 100 ounces of silver to buy an ounce of gold. Historically, that's 16 to 1. It just demonstrates as a single criteria just how undervalued silver is against gold. And the last time we saw numbers like this, the price of silver was trading around $11, $12 an ounce. And within 4 months, we hit $30, $31, $33, $32, $33 an ounce. 4 months later.
Yeah.
So silver looks like it's on the launch pad. What say you, Jerry?
Well, the silver to gold ratio is that gauge that we use, the ratio that we use to determine which one is the buy. You know, which one's undervalued. So we use that ratio, but it also tells us a couple more things for the investors and for the people that are looking on the outside, trying to look in, and to see if this is the right time to jump into the market. Of course, psychologically, you know, according to, you know, investor psychology, you don't want to buy at the top, of course. So you use the ratio, and the ratio also tells us the metal markets haven't broken out. The gold and silver precious metal space has not broken out yet. The party hasn't begun despite the champagne popping that we're experiencing right now in metals. When you see the metals, when you see that ratio starts to go down to below about 70 to 1, that's when we are entering into the breakout period. And right now, the 102 is just signaling where we are a coiled spring. Silver is on the launch pad, but it also gives you a strategy to know when to potentially swap out of silver for undervalued things. Silver would have that purchasing power that you need to purchase a home, to purchase the Dow 1-for-1 or the S&P, or back to gold. And you can play these cycles over the course of one's lifetime, maybe about 4 to 5 times, to not just improve your averages, but you're also increasing naturally just more ounces in your hands, in your portfolio.
So you're saying if someone said gold was really expensive right now, you'd beg to differ?
I beg to differ. This is just the beginning. You know, we haven't even seen, you know, right now recession fears and rate cut expectations are driving gold to all-time highs. Gold hit an all-time high this morning. It peaked about the 31.70 US as we're recording on the Thursday. Over the past 4 weeks, though, gold has gained 8 to 9%, and in the last 12 months, you mentioned over 30%. The last 2 years, we're up almost 70%. Isn't that the type of money we're looking for in our portfolio? Of course.
Yeah, but at the same time, if you look at the Dow gold ratio, a couple of years ago it was 16 to 1. I think we're down to 12 to 1 about now, maybe 13, 12 to 1. In 2011, when gold peaked out, it hit a 4 to 1 ratio. And in 1980, when it was at maximum purchasing power, it was at a 1 to 1 ratio. So that's just another criteria. Look at how many ounces it takes to buy a house. This isn't about price. It's what it buys you.
Right.
And I think that's the key, is that also, you know, through 2013 through to 2018, gold had a down period and consolidated all of the gains it had made from 2000 up to 2013 and 2011, 2013. Meanwhile, the debts just kept going higher and higher and higher.
Yeah.
And then you hit COVID and the debts went even parabolic. And so you have to understand that gold, unlike the dollar, cannot be printed out of thin air. And the amount that you can pull and add to the stockpile is less than 2% a year. It's kind of, Jerry, like housing in Canada. You could throw all the money you want at it. You could increase all the labor available, but there's only so much material. And to actually increase it, you can only increase it by yay much.
That's right.
Anything beyond yay much is just a paper promise. And it's the same thing in the gold market. It doesn't magically appear. There's not a fictitious amount that's just going to be mined out of nowhere, and all of a sudden there's this overhang, right? Price is what will fix that issue.
That's
and
right.
That's why you're seeing the prices gain. Also, you've got, I think, let's go geopolitical here for a moment. I'm finding this past week very interesting because on our show, we have tracked the progress of the BRICS. They're buying gold, they're accumulating it, they're looking to, you know, the US dollar was weaponized against them. They want support, they want assurances. And when this tariff stuff happened, who came to the table? A lot of those BRIC nations came to the table except one. Right?
Interesting, yeah.
Except one. And so it's interesting to see how they all rallied together with the U.S. I found that very, very interesting. And it goes towards our hypothesis that you're no longer holding gold and silver to protect against a complete dollar collapse or a collapse, a doom loop of the debt. But because gold is going to be part of the solution of
That's
all
right.
of that.
That's totally it. We're seeing the Mar-a-Lago Accords coming, and this is going to be the transformation of the global financial system, literally overnight. And this is what happens when you have the U.S. Treasury with an account called a gold revaluation account. This can change the landscape across the globe, and this is actually changing the way things are trading. You know, we've seen our exports, our manufacturing being exported to places with zero, cheap labor, even slave labor. Sometimes look at the major corporations that have been taking advantage of this cheap labor. Things got to come home when you slap tariffs over. Potentially, they're arguing for 400% tariffs from Kevin O'Leary. This is going to stymie that manufacturing over there and bring things home. It's reshoring, and it's seeing the strategy of using tariffs versus taxing your own people. This was the old age strategy prior to the Federal Reserve central banking system, which is the fifth plank of the Communist Manifesto. We got to take back the control of your currency, of your nation's currency. Look at our central bank over the past few decades. We sold the last little bit of ounces that we had in the tons of gold. The Canadian sovereignty, our gold was sold under Carney in 2016 with Trudeau. And that was the last little bit. And over the course of, the last 5 years, the Bank of Canada has decided to explode the currency 4 times the size of our GDP. Our economy cannot sustain the loss of purchasing power anymore. We are a very resource-rich nation. And things got to start, making more sense when we start drilling again, start getting it back into the mining. Silver, we were number 1 in silver mining globally. We should be a very wealthy nation, but there is a faction trying to keep that back.
There's one thing you learn when you become involved in gold and silver, which is you do wake up to the geopolitical stuff. So we've got some opinions on that. We're going to keep on that for the next segment because it's very interesting. And where the prices are headed is also incredible. You had Goldman Sachs come out and already revise higher on the price of gold. And you should see where they're looking for it to go medium term. Stay with us. We'll show you where Goldman Sachs sees the price going. And we know that they're conservative because they're a bank. The number 18778 silver, the website guildhallwealth.com. If you want to hold physical gold and physical silver in your registered account, be your own central bank. You own it. You control it. No counterparty risk. Nobody else's liability. It's yours. You own it. You can go to the vault personally, audit your holdings. If you can't hold it, you don't own it, guess what? You can go and test that hypothesis out for yourself. And you can do that with Guildhall. We'll show you how. Of course, if you want to acquire just some physical product for yourself, take it home, store it yourself, we can help you with that as well. Again, the number 18778 silver, the website guildhallwealth.com. Great to see a recovery in the precious metals market. They never really went down. I liked the meme put out this week, the Rocky one, like, you ain't so bad. You know, that kind of like, they took a hit, but it was like, really? Is that your hit? And nice to see some people take advantage of the drop in the market, for sure.
Absolutely, yeah.
And yeah, things are looking pretty darn good in the gold and silver market. Goldman Sachs revised higher to $3,300 an ounce. We had, I think, our first $100 up day in gold in the past week, which is pretty good.
Back to back. We have one yesterday and one today.
Goldman Sachs is also looking for the price to hit 4,500 within the next couple of years. You know, I think it becomes easier to move $1,000 at a time the higher the price goes. It's not as much to overcome. You know, when gold was trading at 1,000, and to move up another 1,000 was huge. Mm-hmm. And that took something like 23 months. And then to move up from 2,000 to 3,000 took something like 8 months. So things can start to move in a hurry. And the retail market still hasn't caught up. You know, we broke a story, not broke a story, but we talked about that in China, the insurance companies are now moving into the gold market, which makes absolute sense. There's nothing more insurance-like than having physical gold as part of an insurance portfolio. I could only imagine what the insurance companies who've been chasing yield because of low interest rates for a dozen years, if they would have just had gold in the portfolio that's up 700% in the last 20 years. I mean, it's a no-brainer. But for some reason, it's a very complicated thing for people. Mm-hmm. I don't get that. I don't get it.
They make it complicated. Gold and silver, they've been around for thousands of years. They've been money for thousands of years. Portable, divisible, durable, scarce, recognizable, beyond languages, religions, creeds. We all understand what gold and silver are and what they do. Even in Mad Max scenarios, you can always rely on those silver maples.
But it's not digital, Jerry.
Well, that's the reason why I want it. You know, this is the time to undigitize your wealth when you have banks that could potentially, or they have locked bank accounts. Your money is just sitting on a ledger, ones and zeros, binary codes that can be deleted, could be bailed in if necessary, but that'll never happen, right? This is Canada that we live in, but Canadians are seeing for themselves the loss of purchasing power everywhere. The loonie has lost over 96% of its value since 1915. Paper money intrinsically just goes to its intrinsic value, which is zero. And where else to put your wealth? Right now, the S&P, the stock market, is down 6.1% in its largest decline since March 2020. We are just 50 points away from the first circuit breaker in 5 years. The market is actually crazy right now, Jeremy. Last week, we saw a fake tweet hit the market saying that there was going to be a pause, a 90-day pause, which saw in a matter of 5 minutes the S&P and the Dow surge over 2,000%.
That was
Portfolios were 7-8% higher, and then the tweet circulated to CNBC, then to Reuters, and then they realized through the own admission of the White House that it was a fake tweet, that Trump was not putting this 90-day pause. And then the markets tanked from 2,000 points higher into negative territory. And we saw gold and silver as a result because this was one of the largest margin calls since 2020 that hit. And what happens during a margin call? You look for assets that are easily liquidated, gold and silver. But those silver positions and gold positions that were sold, it was not physical. This is the paper stuff. This is stuff that you could just rip up, maybe print, and then here's a contract. This contract's worth 5,000 ounces. Well, the problem is you have over 400 of these fake paper contracts for every 1 ounce of physical silver available. And you have over 100 of these contracts for every 1 ounce of physical gold available. Basel III rules are coming into play. Could this potentially stop this market sell-off in gold and silver? Because you know what, Jeremy, the way I think, it's a strategy. It's a psychological ploy because we know historically gold and silver are inversely correlated to the US dollar and the stock market. So when the stock market start to plunge, you would have normally gold and silver being that life shore. But if you use these contracts to dump at the same time of the stock market collapse, there's nowhere else to turn, right? Why should I buy silver and gold when they're pulling it down? But like you said, just like the Rocky moment, it was a one count. Silver and gold were back up in a minute. And look at today. Everything is a sea of red. What is up today? Your gold and your silver. Your silver's up 2%, your gold's up 3%. This is what you want in your portfolio. It's stability and it's time tested.
The number 18778-SILVER, the website guildhallwealth.com, to own the stabilizing asset of gold and silver in your own portfolio, physically allocated, segregated. You own it, you control it, you're your own central bank, and you can do that with Guildhall. We'll show you how to do that. I think it is very interesting, Jerry, that last week it was a paper slam. We didn't see anyone in the physical market selling. In fact, Jan Nieuwenhuis put out a tweet demonstrating that the retail market, and this is something Rick Rule, who used to be with Sprott, has said countless times, that the retail market still isn't even participating in the gold and silver market. So imagine what happens when some of the retail market moves into gold and silver. And I believe, by the way, that that's going to happen as more money gets into the pockets of your everyday retailer. When you look at tariffs, it's so funny. I have conversations with people about tariffs. They say, but we can't get things cheap. If we put these tariffs on, we can't produce things as cheap. And you say, do you think that the person working in a Chinese factory wants to be getting paid nothing?
4 cents an hour, 4 cents to $1.
Do you think they actually want those lower wages? Right? That's a top-down problem. So I think what the U.S. is trying to say is we need to fix these things and create more fairness across the board. You guys need to consume a little bit, not just produce on the backs of, dare I say, slave labor. But I wanted to, Trump keeps going on about McKinley.
Yeah, what's up with that?
I came across a great quote, Jerry. I want to share it with everyone right now. They say everything would be so cheap if only we had free trade. Well, everything would be cheap and everybody would be cheap. I do not prize the word cheap. It is not a word of hope. It is not a word of comfort. It is not a word of cheer. It is not a word of inspiration. It is a badge of poverty. It is the signal of distress. And there is not a man in the audience, not a white-haired man, who, if he will let, sorry, that's really small print, who, if he will let his memory go back, will not recall then when things were the cheapest, men were the poorest. Cheap? Why cheap? Merchandise means cheap men. And cheap men mean a cheap country. And that is not the kind of government our fathers founded. And it is not the kind their sons mean to maintain. If you want cheap things, go where you can get them. You want cheap labor, we want labor to be paid well.
Yes, that's right.
Wow, 1889. That guy had some
foresight.
Absolutely. And you know what it made me think about, actually? Synthetic diamonds.
Good point.
I was reading that, and I was thinking synthetic diamonds. Why? Because people made the economic decision to buy something cheaper.
That's
right?
it. That was their main motivator.
That's what they were sold. It's cheaper. It looks the same. It gives you the same effect. It's the same thing, and it's cheaper. And people just make that decision. Of course, they overproduce them And now,
Blew up that market.
they've gone from being 1/3 the price of a real one to, 2/3 the cost of a real one down to 1/3 the cost of a real one. It's basically like Italian beads when the Europeans bought New York, and they're manufactured. So now they're worthless, and now the industry is going back to the real thing.
Intrinsic.
And I totally believe going forward, it is going to be all about value.
Yes.
You don't need 20 sneakers if you have one good quality pair. That
Right.
kind of thing, right? So I think it's always going to be about quality, and nothing says quality more than a gold standard, right? The gold they put the gold seal on everything. They do the finance magazines at the during investment time, and it's always gold. Gold. That's what they give you at the Olympics. That's what they give you with your trophies. It's always gold, right? Why? It's not just because it looks nice, although that is part of it historically, because it's a metal that looks different than all the others, right? That's by design.
Mm-hmm.
And it also doesn't disappear. That's something.
That's
Right?
what you need.
All other metals can eventually disappear. This doesn't disappear. It is malleable, and you can change it. It doesn't cost a lot of money to change old jewelry into new jewelry and re-refine it and all of these things. It's very low cost, and that's why it's stored energy.
Mm-hmm.
And it's not just because central banks say, oh, it's a relic, we want to hold this relic. Why are you buying tons and tons of this relic?
Right.
Right? Did you see Scott Bessent, by the way, being interviewed with Tucker Carlson?
I saw that, yeah.
So yeah, he was shy about, skittish about like why all the gold was coming in.
Can't show his cards
But
yet.
but he made his way towards. I had gold in my fund when I was the fund manager, and some people called me a gold bug, right? So he definitely likes it, and I think. And then, did you see the monetary metals? There was a great animated graphic of gold as reserves. Did you see that one?
No, I missed that one.
Okay, so what it is, they started from 1955, and they show reserves.
Okay.
So they had gold at the top. It was like 70% of all reserves held in 1955. And then you had like the US dollar, British pound, and then a couple of splattering of other currencies.
Okay.
And over the years, you see it adjusting, right? And it starts to, they lift the gold standard. It starts to come down a little bit. The U.S. kind of goes above in the early 80s. In the 90s, gold goes way off the charts, way down to like nothing. And the U.S. dollar becomes like the global reserve currency. Euro starts to be held in places. And then at around 2019, 2020, you start to see it go the other way.
Interesting.
It's back up to about, I think, 20%, 30% now. So it's got a long way to go. And I just looked at that chart and I thought, it's not so much that they have to accumulate more, but if the price tripled from here, bang, you're already there.
Mm-hmm. That's right.
And that just makes me think, well, this is like a no-brainer to hold some gold while it gets revalued. And the asset side of the balance sheet goes way, way higher. And then I picture Trump saying, yeah, if we revalue the Treasury gold, yeah, we'll get $800 billion. But you know what sounds better, Scott? You know what sounds better, Scotty? $2 trillion.
Yeah.
How about $2 trillion?
You could do it.
And at $2 trillion, gold's not revaluing much, much higher from here.
No, I think what's very clear and evident is that within that time frame, and within less than 100 years, the cheapness, you create cheap money, cheap labor, it dies after a while. It just shows the longevity is not there. Gold surpasses, and this is why after a system dies, whether it be the currency system, you have bubble territories everywhere, derivatives, it's toxic. It's toxic on the balance sheets of these major banks, your bank, our bank, full of toxic dead waste. Credit default swaps, the same mortgage-backed securities that are backing the bond collateral is dying underneath. There needs to be a rescuing of our monetary system, the U.S. Treasury, and they're going to be dumping U.S. Treasuries as we're seeing right now. What do you think they're buying? They're buying physical gold. They're not buying the paper promises, because the paper promises, just like every other promise that's on a piece of paper, will go back to zero. Anything written on that piece of paper will go to zero. And as we are noticing the accumulation, we would stress and urge you to now convert out of the fiat fake money and into something real, tangible. Value your portfolio in ounces instead of that worthless currency that will continually depreciate. We want to help foster that community, and that we understand that you value your work, you value your family and financial resilience, independence, and freedom. We want to help you do that. So get in touch with Guildhall. You've been listening to The Real Money Show on AM 640 Toronto and AM 770 Calgary.
Welcome back to The Real Money Show, the number 18778-SILVER, the website, guildhallwealth.com. And at Guildhall, we'll help you and show you how to hold physical gold and silver in a registered account as well as in a depository, or just buy it direct. A lot of people are new to the market, and we understand that, it's a change. Fundamentally, people often think about investments as something you don't really see, touch. But in this case, it is, and it's a retail object, and so there's costs that are involved in that. It's actually a lot more like real estate than anything else, but just with a lot less costs. Mm-hmm. Not that it's cheap; it doesn't make it cheap, but there's a lot less costs. So far this year, gold's up 20%, silver's up 7%. Things are looking really good. Some dynamics happening in the market with regard to paper, but I think physically the market is looking very strong. We see that China's bringing gold into the insurance companies. We talked last week about Bateman. I forget his first name. David Bateman. He's a billionaire. He bought $500 million in silver. That's really putting your money where your mouth is, and he's got to be doing pretty decent on that already. Goldman Sachs looking to revise up to $3,300 this year for gold. Something tells me that they might have to revise that again. And now, Jerry, talk to us about some updates from David Bateman. And you were saying at break that there's an interesting stat about the S&P. I'd love to find out about that.
Yeah, so billionaire David Bateman bought $500 million worth of silver, and he's just been tweeting all about the reasons for his positioning. And he wrote this week, very interesting. There's approximately $300 billion spent each year buying newly mined gold for investment purposes. Silver is only a $25 billion annual industry. If just $5 billion, or 1.5% of gold's investment capital, flowed into silver, the silver price would go stratospheric. That's just 10 investors like me around the world. That means a single country investing in silver could cause a generational silver breakout, or 10 large $50 million investors. Oh, and your silver investment won't have any counterparty risk if your bank fails. Think how many large investors silver will soon attract as banking sector stress returns. This is why there is a globally coordinated effort to suppress the price and demand of silver. There is less above-ground silver than gold in the world. Silver is essential for manufacturing. Silver is in a 5-year structural demand supply deficit. Silver's day is coming very soon. And he said this is not financial advice. He's just looking at the ratio, seeing that it's 102 to 1, and it mirrors what UBS is reporting to their clients. Now, UBS, major bank, is urging investors to buy silver amid the ongoing tariff turmoil, forecasting a significant price increase for the precious metals in the coming months, despite recent declines. And again, just a reminder, those declines were not the physical. It's not the physical that is going into aerospace. It's not the silver that's going to satellites, defense, optics, semiconductors, electronics. There is a very specific and significant role in all of these applications and these industries. If it's important for silver to be in these industries, as well as important for silver to be imported by the U.S. and going towards the U.S. Treasury, that's a very big tell for me, Jeremy, that it looks like this new standard that we will see, it's going to be like a bimetallic gold and silver standard. Your thoughts?
Well, I think that, number one, we've already seen one person put in $50 million a couple years ago. So we're 10% of the way on that. And I would add David Bateman into that as well. So you're already 20% of the way to what he's looking for,
right?
Which is interesting. And again, the retail market hasn't gotten involved. I think when we look at the imports from London, we've talked about this at length, but nonetheless, they don't have any gold. They have a little bit of silver yet, but even when they ran out of gold, it's backstopped by central banks. Hey, South Korea, can we borrow some? Hey, Argentina, can we borrow some? You know those Bank of International Settlements loans? Yeah, we need that collateral right now for something else at the moment. But with silver, there's no backstopping. Once they are out of that product in London, that is it. They are out. And that's why this market is so explosive all the time. So really, really just crazy, interesting times in the market. It feels very strong. And to your point earlier in the show, it feels very much like we're at the beginning of a bull market. We're nowhere near the end of a bull market. The end of the market is when you start fielding calls from people who have no interest in understanding the market. They just want to get in, and we are nowhere near that yet.
Right.
And we also haven't seen a pivot. I dare say that word, Jerry, pivot from the stock markets, and any rotation out of maybe cryptos or out of the stock market. Anyone looking to really diversify. I don't think the big change has happened yet.
No, not at all. Knowing that the population that owns gold and silver is around 1%, so very underinvested. Gold and silver is going into central banks, but not enough going into the people's portfolios. Again, just 1.5% of all that money sloshing around the world will eliminate all investable gold, even less in silver. So just once again, it was a big call from UBS to acquire silver, stressing to their investors to add silver to their portfolio. This is.
What do you think was behind that? Like, why are they saying silver? Why not gold?
They obviously know that the market fundamentals. It just reminds me that knowing that as we are advancing and seeing the deficits coming out of the ground, the fundamentals are just economics 101. If there's more demand for lack of supply, you put your money where that is. This is an undervalued asset versus gold right now. You need 102 ounces of silver just to get 1 ounce of gold. And looking towards as we are advancing technologically, the U.S. has no stockpiles of silver. They used to have it in the 60s. They stopped reporting in 2002. And currently, the U.S. does not have a dedicated national defense silver stockpile, which represents a very significant vulnerability. But they have to establish another stockpile. They have to refill the oil, the strategic oil. And I think we're moving towards that as oil is dropping around $60 strategically. This would be a very big, strong mitigation strategy, because it's one measure that the U.S. Geological Survey has to do. They've labeled other minerals to be critical, but not silver. They're going to signal that very soon, and it's really here to not just be there for your stockpiles for industries. It's going to stockpile your currency. When you start going back to the gold and silver standard, you're going to need a lot of it, and you have to have that stockpile.
Even if they have digital stable coins and all of these things, they'll still have some sort of backing of the physical gold and silver, because you want something that can't be created out of nothing, that has use case for it, not just the math.
That's right.
Right? It can't just be the math. It's got to be, that you can actually stack these things, turn it into something. There's usefulness there technologically and all other matters of applications. The fact is that as a commodity, it's worked for thousands of years, right? And silver has a lot of catch up. The number 1-877-8-SILVER, the website guildhallwealth.com. We will show you how to physically hold gold and silver in your registered account, buy it direct or have it stored for ease of liquidity. Make sure it's secured, make sure it's insured, puts your mind at ease. It's becoming an essential part of your portfolio. And if you're going to do it, why would you make an investment and add additional counterparty risk? You're better off to remove that counterparty risk, remove that additional liabilities across the road and that risk and have the actual physical product. The number 18778 Silver, the website, guildhallwealth.com. We're talking about real wealth, real assets, ways to protect your wealth and grow your wealth, holding physical gold and physical silver, and not to be outdone by natural fancy colored diamonds. I believe that market, listening to that McKinley quote, I really believe that the diamond market is also going to become quite popular again. We've seen auctions doing quite well. And I think as value comes back into the market and an understanding of real things, not just, you mentioned last week, Jerry, I think about the S&P and how the majority of it is intellectual property and all of it's digital and none of it, whereas it used to be more resource based and you could invest in real things across the board. Now it seems like the only real thing to invest in is actual physical gold and silver. And it's not just the gains in gold and silver, but it's the missed opportunity of not diversifying. So you were saying at break about the S&P, Jerry, that the S&P is down 8%, gold's up 20%, more now, and so it's not just that gold's up 20%. It's that if you account for the losses in other markets, there's actually more of a 28% swing.
Yeah, that's right. I mean, we saw the stock market whipsaw back and forth, and it will continue to do that. And metals, it just proves to be a stabilizing force for all of the financial portfolios that we see. And when it comes to gold versus the stock markets, the S&P being a popular one, the contrast, I mean, you cannot compare. The gap, year to date, gold so far has climbed about 15%, while the S&P has tumbled 15%. So that is a gap of 28.5% performance gap that to me speaks volumes, and it should speak volumes to someone who is trying to look rationally at their portfolio. How do we retire? Why am I not hearing a good strategy beyond wait and see? Let's hold off for the long haul. This is the long game here. People have had enough. I don't know if you're listening and you're not getting the replies from your planner, or if you're not convinced that a 2.5% yield or a GIC is going to cut it. Because if you factor in real world inflation, real world inflation is what matters. According to Trading Economics, the deposit interest rate in Canada, the GIC, averaged like 6% since 1975. But according to the Bank of Canada Museum, prices increased by an average of 8% per year throughout the 70s. Okay, so that's inflation, around 8%. As high as 12% in 1974. In 1980, the CPI recalculation conveniently lowered the reported inflation down to 2%. So it went from one year around 10%, in the next year to 2%. Of course, they can dangle that carrot and say, you know what, you're going to get 4% with the GIC. The reported inflation today is 2%. No, it's not. The real world inflation is about 12%. Meanwhile, gold has returned for our investors an average of 11% over this time versus all major currencies that are being devalued. Look at the currency wars that we've seen so far. Look at the Swiss franc. Look at the bonds. Look at the Chinese yuan and renminbi. All of these currencies versus gold are going down the drain. You need to value your wealth in ounces, real assets, resources, not fiat currencies. They're going to go to zero.
The number 18778 Silver and the website, guildhallwealth.com. Jared's listening to an interview with Eric Sprott on Kitco, and he made a really interesting observation. And they were talking about how his first acquisition of gold was when it was around $250. And he was saying, on that investment, when you see the market move up $100 in gold, in a matter of a couple days, you're making 40% gain on your original investment.
Right.
I thought, wow, that's so true. You don't think about that. The longer you hold gold and the higher it's rising, the more gains you're getting on the original investment. But it's so hard for people to make that first step because they see the price rising. They think, I'm missing out. What would you say to the person who's looking at the market right now? They're seeing these gains year over year, and they're just looking at those saying, when am I supposed to buy into that? I've missed the boat.
Well, as Henry Hazlitt said, the great merit of gold is precisely that it's scarce, that its quantity is limited by nature, that it's costly to discover, to mine, and to process, and that it cannot be created by political fiat or caprice. The spiel of saying this has value because I say so, the decree is no longer valid. It's no longer a good point, and the people have had enough, and they've been gaslit to a point where they're making a move. You know, we have to trust gold because we cannot trust the governments, what Herbert Hoover said. You can't trust it. When you start skewing the metrics for your own personal and political gains, people want change. And the best way to change is to remove these funds from the banking system, perhaps, from the conventional stock markets, because you know, it's a bubble territory. The price to earnings, the price to book ratio are still in overvalued territory. Find something for your portfolio that is finite, that is in demand, and that is going to change your life. Because when things get revalued, or if we just use the repeat of the gold and silver cycles, we're just at the beginning of a massive hockey stick. And you want to have that type of exposure for your portfolio.
Yeah, and it's never a bad time to have insurance. It's never a bad time to have insurance. And yes, rates are only going to rise. Prices are only going to rise. You've got to take a first step. I would suggest taking a smaller step if it's a concern. Just start smaller. Crawl, walk, run. And you'll find yourself really pleased that you took that first step and foray into the precious metals market. The number 18778-SILVER, the website, guildhallwealth.com. That's the number. That's the website to hold physical gold and silver. Buy it direct. Hold it in a depository for ease of liquidity and insurance and security, or have it in a registered account like an RSP, TFSA, Lira, Lif, Rif, you know the drill. And that's so that you can own your own physical product outside the banking system so that you know your wealth and your family's wealth is secured. Jerry, thank you so much for joining the Real Money Show today. Always a pleasure to chat with you.
Always a pleasure.
And if you've missed a show, check us out on YouTube. Check us out on Rumble, Spotify. We're on all the places. Follow us on X. And we can't wait to speak to you next week here on the Real Money Show on AM 770 Calgary and AM 640 Toronto.